What's up, guys and gals? Sorry, not good lighting in this room, but I just wanted to get out here before the close. Today's Halloween, October 31st. You should have just received an email in your inbox. And I'm just mentioning and reiterating on here, for those of you that end up joining in, we've got a very interesting sort of a paradox. Not only a paradox, but we've got a very interesting market that we're going to be dealing with, I think, going forward. And some of the signs that I've been seeing are subtle, but like I said, we are seeing breakouts in a lot of different miners. And some of these miners are going above and below 50-day moving average. There are some of the stronger ones I mentioned in the email that have mostly kept above their 50-day moving averages. If you look at those phenom charts that I put out, that's significant. We're at like a very important price tag on phenom. I'd like to see it close above that 38 Canadian, today, tomorrow, this week, ideally for sure would be great. That's a big breakout. Whether it happens now, I think there's a very high probability of that. Second tranche of financing should close anytime this week. We're going to see some insider participation, I believe. And, that is going to be money in the bank, bills paid, more news coming out from Smoke Drilling, Carlin Drilling. And I'm just really excited about the whole sector. And, for those of you that have been following my musings here this last month, interestingly, look, everybody going into October was reluctant to go long in the general markets, in miners. We weren't looking good. We know that October can be a very nasty month in terms of surprises. And we were coming out of September. I think it was pretty common sense to not get crazy in the first half of October, certainly, as it pertains to the mining positions, unless you were chipping away. Like I've been just really consistently, for a while now, building positions as we go on the pullbacks. And we saw that happen in GDXJ and some other mining names, where that rally into the first part of October from the September 26th lows, that was a pretty big rally. We were looking at, that was about a 15 to 17% pop in a week on GDXJ, which is what I have up right now on my chart. And it's right on that 50-day moving average support. GX above it, GDXJ right below it at 29.46. We'll see what happens at the end of the day. But I think that, these are the type of things that happen where just before you get a pretty big move, the market kind of messes with you. And, the move could be lower, although seasonally, I do look at these things and I believe that we're coming into a much more favorable seasonal time. And I just am not that worried about tax selling this year. This has been I think for those of you that have followed me for a while, it's my forte, little niche I've carved out in making a living almost off of tax loss flipping, buying certain things that are getting sold off in late October through early November or December, and selling them in the first 3 weeks of January, just from a tax selling purpose time frame where that things are getting hammered without real worry or sensitivity to the price. Some of these are very illiquid. You put in stink bids, but even some of the bigger names, we've had many years over the past, decade, where we've had, our mining names were down, and there were gains in a lot of the general market asset classes, and we would get hit even harder. And then we would also have nice bounces into January. I think, it's a little too early to call exactly how that's going to look this year, but I just wanted to bring it to people's attention. This is not really a time that you want to lull yourself to sleep, because, if we start to break out here across the board on, gold, silver, battery metal stocks, things like this, copper stocks, I just am super duper confident in 2023 that we're going to see higher prices. And it could be a lot higher. They could be considerably higher. Things can very much change. And this really goes back to what I've tried to talk about a lot in action philosophy change, which is, doing the times that I've been able to act the opposite of my emotions, my extreme feelings, as it pertains to not my girlfriend leaving me, but as it pertains to my money, my account values, checking these daily as a professional investor, you get a sense for kind of where you're at. Wow, I'm down this much. This is getting very extreme. Or wow, I'm up so much money. This can't last. We all have those feelings at certain times and the thoughts run through our head. But what do we do about that? A lot of times not enough. I wish I would have sold more at the top. I wish I would have bought more at the bottom. I'm not saying this is the bottom of all the markets, but I saw such common bearishness amongst subscribers, pros, friends, fund managers, doesn't matter, TV, CNBC. I mean, everybody is bearish, and they were bearish in October. And then guess what? I started to get very reluctant early October. I mean, I went into October that first week thinking, we could see some real nasty stuff. But I watched the behavior of the sectors. And that's when it was around the middle of the month that I closed out the last of those shorts that I had on the books, primarily in the big ones were the SRS, the inverse call options, which is 2-to-1, inverse the move in the U.S. real estate index. And then there was the DRV, which is 3X. And some of those were, from June until the big pop in, I forgot exactly when the rallies were here peaking. Look, we saw that in early October. Closing those out, I might have come close to top ticking the second, the last third of my closing out of positions, because those were 10x returns on those options. Okay, that I've talked about that were going out until November and January on their expiry, and they were already in the money, and they made a lot. But I closed them in the face of us looking at still most of the month of October to go, and ripping, but getting overbought, and just making me concerned about the level of bearishness out there that I was seeing. And this goes across over to crypto. And the reason I bring up crypto is because crypto is a risk on asset. It's a high risk on asset still to this day, which I think that could be a very good indicator for the general various marketplaces that will move a bit earlier than others in terms of even like the crash we saw starting last October, November, from the 67,000 highs on Bitcoin. These things can end up starting the rollover or starting a recovery, and even if whether it's a cyclical one or just a technical bounce that sometimes can last months, even in bear markets, and be very, very significant. They can go more than you think. I pay attention to all of it, and then the bearishness in crypto is just beyond belief. Extreme fear and greed reading below 21 on the on that index is crazy, and it never happened that I've seen before over 9 months straight. Too much. So I've gotten really bullish on crypto, Bitcoin. Recently, I've talked about that just because guess what? The market is here to befuddle us. It's here to deceive the masses and take our money. And I tend to just try to read amongst other tools, charts, analysis fundamentally, obviously, but you can't listen to economists. They're the worst. That's the worst thing to listen to in the world. They're the worst stock pickers and investors that exist because they deal with real-time data. They're never forward-looking. They don't take that risk. They have a cush job. They make a couple $100,000 a year, a few $100,000 a year if they're at a big firm on Wall Street, and they just crunch their numbers and they don't take a lot of risk. So, I've used them more as contrary indicators than anything. And same with broad-based, retail, but also some of the funds I know. Sophisticated people, when everybody goes one way, there's usually only one way to go, and that's the other way, because you see what we've been seeing in the miners, which is that selling exhaustion. So I've been very encouraged. I'm just putting this out here before the close because we're entering November tomorrow, and it's generally been very favorable for us as mining investors. Typically, it's a bullish month, and it's coming into a bullish few month run going into January is typically very strong, especially after you've had a very weak year. Now, we'll see what happens. There's a lot of crazy shit going on in the world, but look, we were all waiting for some black swan. People still are, and you might be waiting, holding your satchel, while everything starts to rip, and you finally catch on, and think you're paying 50% higher in some of the small caps, like the phenoms and the gigas and all that stuff. These small stocks have been bombed out across the board. I'm telling you, bombed out. Some of the smaller ones, that are at the 5 million market cap and lower, it's insane. I mean, I've really become very, very, very confident, even with some of the positions that I'm down over 30% unrealized losses already because I started accumulating a bit early. I don't care. I'm going to make a lot on the other side. And, I think you have to be willing to do that. Trying to pick a bottom or pick a top to make your moves is very rare for even the best of the best. And that's why I encourage people to do things in pieces, maybe not just teeny tiny pieces at a time, but certainly taking positions in the general area where you're feeling like you can really feel that value and see that value. Companies, and I'm going to quit this, so I'm going to keep it short, like McEwen Mining, I'm extremely confident that within the next 12 months, you're going to have opportunities to sell that stock at least 40% higher than it is today. Why? Because it's just worth fundamentally a lot more than it's trading at today. I don't even care if you get more weakness first in copper and gold. It is extremely cheap. And for many reasons I've gone through fairly recently. And, it's been hated for a while, and people have forgotten about McEwen Mining and Rob McEwen's ability to generate compound growth rates that are well above the industry average for decades. But he's run into a bit of a cold streak, for a few years. I love betting on things like that. I really do. It's one of those stocks that sticks out to me as being a no-brainer at these prices. I'm looking at it at $3.61 United States. It's a freaking no-brainer if you have the patience. I'm not saying it's going to triple. Even if it doubles into January, I would take some off because it's my second biggest position out of anything in the mining sector. So I would shave off some profits so I can use some of that cash, but just because of the nature of that seasonal play that I tend to go in way more heavy now into through November, and then loosen things up in the early part of the year if that is a seasonality trade that works. And a lot of times it does. And I don't see any difference this year in that, even though we might not see that. We could see the pop go into December, and then we fall off, and January is even a poor year. You have to stay on top of these things. It always isn't like clockwork with the months, but I think we're set up nicely. And a lot of these stocks that I follow, that you follow, in the mining sector are trading in an encouraging manner. And I think that we're going to get that real confirm. Like if we've seen the lows and this stuff is going to start to fly, it's going to happen probably this week. That's my guess. It doesn't mean that if it doesn't close above those trend lines this week, that we're automatically going lower or to new lows. It doesn't mean that. But if we break out of some of these are long-term trend lines, and the consolidation above the moving averages in the sector has got me encouraged. I'm watching carefully. I'll update you if I just say, wow, this is an official breakout. We need some volume. We saw that on Phenom last week for a couple of days, which is very good. And we'll see what happens. But, this is when you get the bargains, guys. This is when you get the best shot at the biggest returns, when things are crushed, when everybody else is very, very tentative, when the volumes are low. You don't have to go all in at once, but you certainly can chip away at these positions when you're down, or when you're at a point where you just feel like, some people end up always only buying when things are really starting to move, and that can come back and bite you. I've had it happen to me many times, and that's why, if I can say with confidence that in our sector, the gold investment letter covering precious metals, covering precious metals mining stocks, I see tremendous value across the board in our names, in the metals themselves, and I see them going much, much higher in the months and years ahead. And they could take longer than I think or that I've thought, which is why I started buying a bit early. But I'd rather be early than late and have my positions than start to scramble. And things are moving and they're galloping like right away because they're bombed out. No more sellers, and then those offers. Okay, and so we're going to see that again, and I think we see that again in our sector soon. Have a good day.